Hey everyone, welcome back to Corporate Decoder. Today, 2020's Biolabs Incorporated just filed an 8-cake announcing a change to their bylaws, and I am seeing one detail that could impact how decisions are made. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details a rule change for how many shareholders need to show up to approve things, and it significantly lowers that bar, which can speed up decision making. Alright, let's dive into what 2020's Biolabs Incorporated has shared with us. They filed what is called a Form 8, which is basically a report for big, important events that happen between their regular financial reports. Think of it as an, oh by the way, filing for shareholders. The key date here is May 19, 2026. That is the day the company's board of directors made a decision that is being reported today, May 26, 2026. This is all about 2020's Biolabs Incorporated. You might know them by their stock ticker, AIDX. They're incorporated in Delaware and have been around for a little while, with an IRS employer identification number of 57 to 2,272,107. Now, something most investors care about is how their shares are traded. 2020's Biolabs Incorporated has common stock, and you can find it traded on the NASDAQ stock market LLC under the symbol ADX. The company is checking a box that says they are an emerging growth company. This is a designation for newer companies that can get some regulatory relief, like potentially delaying the adoption of new accounting standards. This tells us they are likely still in a growth phase and might not have all the established processes of a larger, older company. This is the core of the filing. The company's board of directors made a significant change to their bylaws. Bylaws are like the internal rulebook for how a company is run. Here is the key takeaway. They changed their bylaws to lower the requirement for a shareholder meeting to be considered official. Before, you needed a majority, meaning more than 50% of all outstanding shares represented to have a valid meeting. Now, they only need 1/3, or about 33.3% of outstanding shares to be represented. What does this mean in plain English? It is now much easier to hold a shareholder meeting and make decisions. Think about it this way, if you have 100 people in a room and need 51 to make a decision, that is a high bar. If you only need 34 people, it is a lot easier to get things done. This change means that a smaller group of shareholders can now pass resolutions, which can lead to faster decision. It might also mean that the influence of a few large shareholders could potentially increase, as they might be able to reach the 1/3 threshold with fewer other shareholders participating. This is a significant shift in corporate governance. This section just reinforces the previous point. The information about the bylaws change is also being reported under this item, confirming that this is a material update to how the company is structured and governed. This part of the filing lists all the documents that are attached to this report. It is like the table of contents for the supporting evidence. This is the actual document showing the new rule. It is called Amendment Number 1 to their amended and restated bylaws. This is where you would find the exact wording of the change. This last exhibit is a technical one, related to how financial data is presented electronically. It is mostly for regulatory compliance and machine readability. The report is signed off on May 26, 2026, and it is signed by Jonathan Cohen, who is listed as the Chief Executive Officer. This indicates he is officially authorizing this filing on behalf of 2020's Biolabs Incorporated. So, looking at this filing, the main story is the change in the quorum requirement for shareholder meetings. This lowers the bar for decision making for a company like 2020's Biolabs Incorporated, particularly if they are considered an emerging growth company. Streamlining governance can be important for agility. However, it also means fewer shareholders are needed to approve potentially significant actions. This could be a positive for faster operations. But it is also something to watch, as it could concentrate power among fewer participants if attendance remains low, given the recent news about their cancer screening tests and stock performance. This governance tweak is happening in a period of some activity for the company. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Comment, subscribe, and join our Discord if you want to keep diving deeper.